keep the conversation going about where the markets are heading. Before we do that, let's get into conversation with the newest kid on the block, Sanjay Singhania, MD and CEO, and Nikhil Bothra, Executive Director of EPack Prefab Technologies. We're in conversation with the management to talk about their new listing and what are the plans going ahead. So first of all, many congratulations on your listing today, Sanjay. Talking about your business, you operate in two distinct verticals, PEB and EPS packaging. How do you plan to allocate the IPO proceeds to both the businesses? What is the mix going to look like?
Yeah, good morning. Thank you for having us on the call today. It's a momentous day for us. And for the IPO proceeds, like we are putting in three baskets right now, three buckets. So we are putting about 160 crores in CapEx, which is going into the prefab division completely. We are not doing any CapEx as of now in our packaging vertical. And then another 70 crores is going towards the debt repayment. And 70 crores is the GCP, which will be utilized for the IPO expenses as well as for gearing the working capital.
Okay, Sanjay, you've allocated a significant portion of the IPO proceeds to set up a new manufacturing facility in Rajasthan and expand the existing one in Andhra Pradesh. Tell us more about these facilities and what kind of revenue contribution is expected from these over the next 2 to 3 years.
So we are doing a brownfield expansion in our Andhra facility where we are ramping up our structural steel fabrication capacity from 1,33,000 tons to 1,70,000 tons, and we are doing a capex of 102 crores in our Gilot plant to set up a insulated sandwich panel line, and that would ramp up our capacity to 21.1 lakh square meters of sandwich panel. Traditionally, our asset turn has been around 4.5, but it has the ability to go up to 6. So with this 160 crores of revenue, we can expect, with 160 crores of capex, we can expect a revenue of 800 to 1,000 crores addition.
Right, okay, sounding good on that front. But Nikhil, coming to you, you have allocated a part of the IPO proceeds to repay debt. What is your long-term strategy for maintaining a healthy debt-to-equity ratio, especially as you undertake significant capex for expansion? What's the ratio you're targeting?
Right. So, we have been investing, we have been doing capex in the last 3-4 years. Therefore, we have around 50 crores of net debt in our books as of now. So, total debt is around 210 crores. Out of that, net debt is around 50 odd crores. We'll be paying off 70 crores and balance also we have been paying in this year. So, we are expecting, by the end of this year, we'll be almost net debt, negative or equal. So that's our strategy. We have been always focusing on, not having too much debt on our books, and that will be the strategy in the future as well.
Okay, Sanjay, your operations are currently concentrated in North, Central and West. What is your plan to expand your presence in South, East, if at all there is one, and how do you diversify revenue streams?
Yeah, see, we have 3 facilities at this moment for the prefab and 1 facility for the packaging vertical. For prefab, the 3 facilities are in Uttar Pradesh, which caters to the northern market. We have 1 facility in Rajasthan, which caters to the west. And we have this Andhra facility, which came in January last year. And that facility already has seen 1 round of expansion after just 6 months of inauguration. And we are doing another expansion now with the IPO proceeds. As far as, geography is concerned, we are a pan-India player. We are having a share of almost our revenue, about 30% each from all the 3 north, south and west, and around 10% of our business is coming from the smaller zone of eastern part of India.
Right, and Nikhil, before we let you go, you've experienced negative cash flows from investing activities in the past. Now, as you continue to invest in expansion, what is your plan to improve cash flow from operations?
Yes, so it was 1 year, like 3 years back when it was, almost negligible cash flows, but thereafter it has been positive for the last couple of years. And, we have been maintaining a good positive cash flows. So we have done a couple of things in terms of maintaining our, inventory levels at the check. We also, are taking care of, our account receivables, account payables. So we are making sure that, the cash flow is positive, and we focus on that a lot.
Okay, so that was the management of EPack Prefab, the newest kid on the block, Nikhil Bothra as well as Sanjay Singhania. Thank you so much for your time.